traders, I hope you're enjoying your weekend, having a great time. And this week I'm going to start with the list of economic data because there's some very interesting things coming up. We've got non-farm payroll on Friday for a start. We've got European rates on Thursday with UK rates, and a lot of Aussie data through the week, which I want to talk about. But the key thing this week, I think, is as I'm about to show you, the data for the first part of the week is very positive. The data for the second part of the week is very interesting if it goes to plan. Now, according to a lot of economic forecasters out there, if we look at Thursday, we are looking for a drop in the euro repo rates from where are we? Base rates are looking at a drop from 1/4% to 1/10 of 1% to match Japan's interest rates, and the UK is looking to hold rates with the possibility of increasing rates either the back end of this year or early next. So some interesting things, and the non-farm payroll on Friday is expected to be weaker, with a drop in job changes, which will increase the employment rate according to the projections from 6.3 to 6.4. These are only projections, so we've got to wait till the actual data comes out. So what I'm looking for is some bullishness in the first part of the week, particularly from the Aussie. Because if you look at building approvals here, we've already had Chinese data, which is above expectations. So Sunday, 2 AM UK time, we had positive Chinese data. Then we've got an increase in inflation in Germany in the early part of the week. Good manufacturing UK data. Positive US manufacturing data. So why did the market hold up in light of such weak GDP data from the US on Friday? Well, the US had an incredibly bad winter, and yet a lot of leading indicators from the US are showing a rise in economic activity. The GDP is obviously a lagging indicator. The market has treated it as such and chosen to ignore the negative data and chosen to acknowledge the increase in activity shown in other data, such as particularly consumer confidence, inflation, home building. All these indicators have been very, very positive. So, including jobs a couple of weeks ago, we had some very positive job data through. So that's why the markets chose to ignore the lagging GDP data on the expectations of a steady increase in economic activity through this year. We're seeing that in the charts. Alright, so let's get on to the charts. Let's look at the main US indices first. Weekly on the left, daily on the right. You can see we had a very tight range during the week, but we did close Thursday, Friday higher. What am I looking for in the early part of the week? A retest of 16,650 area. I mean, any retest of 16,600 is a potential buy. So we just got to acknowledge the charts. All these charts have done is they've held the daily 8 EMA, which is very bullish. Ever since we dropped here, ever since we had this red bar here, the Dow has held and in fact been bought on the daily 8 EMA. The daily EMA is coming up around here. That's typical of very, very bullish consolidation. So any test of the daily 8, which is currently down here, is to be bought. And then let's see where we are. On Monday, as usual, I'm going to be pretty quiet and conservative. But as the week unfolds, particularly Tuesday, Wednesday, start to get position. And I'll tell you what positions I've got already. This is the Nasdaq. The Nasdaq is very extended, bumping up against March highs, so we need to close above this and hold 37.40 in the early part of the week to sustain that. Otherwise, you can see on the weekly it's a big move. So push back to 37. Well, 37 is quite a drop. 37.10 is potentially going to get bought. The 80 EMA is right down there at 3700. So we are extended and a bit of a spinning top. So the Nasdaq is due a pullback, whereas the S&Ps and the Dow are higher. You can see that's the 127 extension based on that fib. So again, could see some weakness in the early part of the week. Possible drop to 1910, 1915, and then it got a hold in the early part of the week. Let's look across other indices. Nikkei, a good 2 weeks. Look how you can see why the market is bullish, because it's come off of major support at 13,900 and got bought over the last 2 weeks on the German DAX, holding the highs. So we are very high RSI up there. We're going to need to see some moves up there. I mean, if the euro predictions are right and they do drop rates, a drop in rates would be very healthy for European markets and of course damaging for the euro, which is what central banks want. Central banks prefer a lower value on their currency to help exports. So we're looking at potential weakness in the euro and potential strength and pullbacks to be bought on European indices. FTSE just hit a major resistance level. I mean, you can see that there's a massive wall in the sand down there, and we ended up flat on Thursday's open. That's all we've done. It's not a sell signal to me, although that is weak. It's just that we have reached saturation point at the moment, and the FTSE is needing to prove itself on Monday to show us where it wants to go. Right, so currencies. Currencies I favour. Let's look at the euro first, because obviously some actually important days coming up the second half of the week. If the forecasters are wrong and they do not touch the euro rates, then this euro is going to head back to 137.40. In the early part of the week, we have got some strong European data. We're looking for positive German inflation. Then the first part of the week, we might see the euro punch up to 136.70 area. If we do, watch for potential sell signals. Euro yen. And this looks a buy to me. I talked about this in the room on Friday. I think in the early part of the week, particularly if German inflation is good, German inflation could lift that up to 140, at which point, and you can see the 50 EMA up there at 140.10. So that is a potential sell at 140.10. So just watch out for that. You can see the RSI come off the lows. We come off a major support level. We come off a fib level. 840 was a fib level, which I bought on Friday and just day traded. But all we've done is come up to, but not close above the daily 8. I do not trust charts that cannot close above the daily 8. Equally, I do trust charts that hold the daily 8, as in the Dow. So, quick look at the pound US. We're under that trend line, under the 50 EMA, but we've had two high closes on Friday, and this support got bought. If you think the pound is bullish, then 167.50 or 45 is a buy with a stop under 166.75. Anytime you buy under the 50 is higher risk. Again, that chart cannot close above the daily 8, and the daily 8 is potentially crossing through down through the 50. So, safe way to play it. Wait until we have Monday close. I am swing trade long in the June contract from the lows this pound yen. Weekly, you can see it's sideways to lower. But look at this 50 EMA on the weekly chart. It's we could, if I'm wrong and I get stopped out, we could see a lower touch of 168.50 down to this massive daily support down here before that pushes up. In the meantime, I am long, and if we get a higher close, I will add to that. I'll start buying the September contract in the pound yen. And what else have we got? Pound Aussie dollar. I think that's a stopping bar, but in light of what I've just said about expectations of better data in Aussie, I will wait and see how it goes on Monday. That is a potential stopping bar. But that's a weak bar in the weekly. What am I going to do? We're stuck between the 50 and the 200 EMA. So I'm talking myself out of this. I think I need to just stand aside and give that a bit more room. If it means I need to buy, I end up buying higher up, then that's what I'll do. If we come down and touch this support 178.60 and hold, then I'll definitely get interested in the long side. So I'll stand aside on that one. Yeah, this is another one I like. If this is the Swiss yen, we've been bearish. We've been on a clear downtrend. We've got on the weekly chart a couple of bobbing tails down there and a higher close on the daily. This will skyrocket if the Eurozone leave the Euro alone, the rates in the Euro alone. That is a potential wedge. You can see we're under the trend line, so we could just hit another retest of this trend line and continue rotate down to the trend, the downtrend. We have got divergent RSI. Some movement, okay. But just because you've got a trend line here doesn't mean to say it's going to crack it and break up. Far from it. This is adding this is a lot of resistance at the moment. It could just come up and retest that highs in the early part of the week and simply roll over and start heading down to 110. The weekly chart, the bottoming tail, the massive support at 130. If we break 113, sorry. If we break 113, then that's in trouble. So we have, however, closed above the daily 8. So let's just watch that. And quickly, Aussie US. I'm talking about Aussie US. This is one of my favourite charts, actually. I think of all the charts out there, I think the Aussie US and the pound yen is the best chart. I'm looking for a pullback 92.76, so I'm going to put a stop on the 92. We can look at that weekly. There's a higher close on the weekly. I think the fibs on the weekly is, so we dropped under the fib zone and pull right back in. We've held this fib zone here at 91.75, closed above this resistance level, and so I think we could see a push up in this. That's potentially a wedge. So I would love to see a pullback in the early part of the week for that one. Looking very keenly at the pound yen for those two pairs to see if they can work. I'll keep a close eye on Swiss yen as well. This is gold. I took a long in gold, very small position, beer money, just as a marker, and got stopped out. But I do think this is potentially forming a bottom. A touch of $1,230, $1,230 could reignite that. Obviously, we're on a clear downtrend, lower closes, very weak weekly bar there. So I'm staying out for the moment, but I do think that there is very, very decent support just under here. But a touch of 1230 could reignite that. But we are extended and the RSI is extremely low. Quick look at oil, and I'll leave it there for now. I'll do a stock review tomorrow. Oil broken up through this trend line. We've got nice opening up of the 50 and 200. The lower close, the weekly is trapped in a range, but I would be very interested to see oil and how that behaves at 102 if it comes down and holds it. The non-farm payroll on Friday, and a lot of positive data expected throughout the week on the US. With one exception, what data expected on Tuesday? What's that? Hang on. Factory orders is meant to be weaker. 3 p.m. on Tuesday, weak factory orders. So if we see a dip to 102 and we hold on some weak data during the week, I will be a buyer. I'm going to look to see if we can break this massive resistance at 105. 105 is a huge brick wall. A Berlin wall, as I call it in the trade, which is there. Alright, so we're trapped under this apex. So at the moment, it's lower closes. Typically this time of year, dips in oil do get bought, and the oil starts to top out late summer, typically in the 20 years average cycle. Alright, I'm going to leave it there. I've got some really good stocks that I'm interested in, so I'll talk to you about those tomorrow. And I'm eyes very firmly fixed on the Aussie US and pound yen. And traders round table, I will talk in more detail about scalping, and I'll also announce some future events. Alright, happy times with your friends and family, and see you on Monday.